Welcome to Insider Week. In this video, I'm going to show to you the trading plan for week number 37. But before we start, we have a special offer for you. We are going to publish our daily trades from today until the 30th of November. This is 3 months where you can learn in detail from our daily trades. In order to profit from this one-time opportunity, you simply scan the QR code and join our Telegram group. For week number 37, we received the following new buy signals. Buy signals in the S&P 500 in mini, buy signals in euro and in Australian dollar, and in the metal sector we received buy signals in gold, silver, platinum and copper. Here you can see our watch list for the coming week. On the buy side we have wheat, platinum, copper, cocoa, sugar, orange juice and lumber. And on the sell side we have gasoline and coffee. Let's have a look at the new signals and the markets on our watch list individually. First, let's have a look at the metal markets because this sector is very interesting. The first market is the gold market. Here we received a lot of buy signals around the same level. This speaks in favor of a strong support level. However, seasonal trend is not on our side in this market. Next market, silver. In silver we can see a clear downtrend. Although the weekly trend is pointing to the downside, we received a second buy signal in a row, and that buy signal appeared at around the same level at the other buy signal. When looking at platinum, we can see that the tendency is slightly negative. However, the trend is more stable than, for example, in silver. When comparing all three markets in the metal sector, gold, silver and platinum, we can see the relative strength of gold and platinum. In silver, we can see that the prior lows have been broken through by the price recently. Consequently, we're interested in the gold and in the platinum market. On the daily chart of gold, we can see that the price is currently below the 18 moving average, so we need to wait until the price moves above the 18 moving average and a daily uptrend exists, and then we'll try to find an entry. On the daily chart of platinum, we can see that the price is already above the 18 moving average. The price already shows one bar fully above the 18 moving average, such that we need to wait for a second bar to appear, such that our 18 moving average entry pattern is available. However, if taking that entry, a stop loss range would be quite high at around $5,000. This is a high risk. Another opportunity could be to wait for a correction to appear on the daily chart and then enter the market. By that, one can essentially reduce the risk. Finally, when looking at the spread of platinum, we can see that the spread is increasing and almost backwardation is existent. This confirms our trading plan for taking a long trade in this market. Next market, copper. In copper, we received a second buy signal. The current weekly bar is higher than the first weekly bar where the first buy signal appeared. However, the seasonal trend is decreasing, such that this market does not look perfect. When looking at the spreads, we can see that there is backwardation available. On the daily chart, we can see that the price moved to the upside, then it went into a correction, and now the price is recovering again. Again, the price moved above the 18 moving average. And now, if a healthy daily uptrend exists, we can use one of our entry patterns to enter this market with a long trade. After a stable daily uptrend exists and a correction appears, we could use that correction to enter the market with a favorable reward to risk ratio. Until then, we need to be patient. Next market, wheat. Here we can see that the price dramatically increased in the past. Then we had a sell-off and now we received a buy signal at the support level. We can see that the seasonal trend is rather sideways. That means that it doesn't object a potential long trade. Furthermore, we can see that the commercial's net position is above the zero line, which is a bullish pattern. When looking at the spreads, we can see that the spreads are moving in line with the price, which means that there's also no objection from the spreads with regards to a long trade. On the daily chart of wheat, we can see that the price is already above the 18 moving average. Our 18 moving average entry pattern is already available, which means that one could already enter this market using the high that we've drawn in this chart. This would result in a risk per contract of above $4,000. One could also reduce this risk by using a limit order, for example at the high from Thursday, and by that reducing the risk when the price touches that price level on Monday. Alternatively, one could also wait for correction to appear to significantly reduce the risk. Next market, cocoa. This is the market where we have fundamental reasons to expect a bullish uptrend. Nevertheless, the timing has not been correct yet. When looking at the spreads, we can see that we had confirmation. However, the spreads also broke down such that we can see that spreads is not a holy grail, but just an indication. It's only one component of a structured trading plan. On the daily chart, we can see in the yellow box the range market of the cocoa market. In the past weeks, we were stopped out several times. This is a great learning opportunity to see that it's better to stay out of a range market and wait for the price to show a healthy trend and then trade it, or wait for a correction and then enter it. And that's what we're going to do in cocoa now. We're going to be patient. Next market, sugar. Here we received a buy signal at a strong support level where other buy signals appeared as well. The seasonal trend is greatly increasing, which is a good indication for a bullish uptrend. When looking at the spreads, we can also see that there's confirmation. On the daily chart, we can see that the price is currently moving in a triangle. It's probable that the price is going to break out and increase. When looking at the March contract, we can see that the price is still in a range, and because of that, we need to wait until the price shows more strength, and then we will be interested in entering this market. Next market, orange juice. Here we received a buy signal. As you can see, the price currently also moves in a triangle, so we need to be careful. However, the seasonal trend is pointing to the upside and increasing for the next period, and we received a buy signal. When looking at the spreads, we can see that there is no significant information. On the daily chart, we can see that the price impulsively moves below the moving average and above the moving average. This is a difficult market to trade. We can also see that POIV indicator is decreasing. Thus, one should be careful when considering this market, as it's also not liquid enough. Another market that is also not liquid and that is only suitable for experienced traders is lumber. As you can see, we received a buy signal at a strong support level where the price is remaining. There's just a bit more time to pass until the low of the seasonal trend is reached, and then the seasonal trend is increasing. Additionally, the commercial's net position is at an extreme position, which is also a bullish indication. Here we can see that the spreads are also increasing, which can be a bullish indication as well. On the daily chart, we can see that the price is moving in a triangle. There is a strong support level, and we need to wait until the price moves and breaks out of this triangle. Once this happens, we will be interested in entering this market with a long position. Next market, coffee. In coffee, we received a sell signal. Firstly, there was a strong uptrend, then price moved below the 52 moving average, and then it moved above again. The seasonal trend for the next period is neutral. The spreads are moving in line with the price, and they are neutral, and there's no more information. On the daily chart of coffee, we can see for half a year the price moves around the 18 moving average. Recently, the price moved below the 18 moving average, then it broke through the moving average again, and now a potential scenario for a short trade would be that the price moves up and builds up another high that is lower than the previous high. That would be a sign for a daily downtrend, and then this market would be interesting for us. And the last market on our watch list on the sell side is gasoline. Here we can see that the price moved in a downtrend for a couple of weeks, and now we finally received also a sell signal. The seasonal trend is also strongly decreasing. From spreads, we don't have any information. On the daily chart, we can see that the price is below the 18 moving average. The price is moving to the downside for a couple of weeks, and sometimes, as at the end of July, there's a range market where a high appears that is higher than the previous high. Nevertheless, in the past weeks, we can see that there were always lower lows. If in the next week the price is moving upwards again but does not overshoot the past high, then we will be interested in entering this market. That's it from our side this week. And now we have a special offer for you. We are going to publish our daily trades from today until the 30th of November. This is 3 months where you can learn in detail from our daily trades. In order to profit from this one-time opportunity, you simply scan the QR code and join our Telegram group. We hope you can benefit from our present. Thank you for your attention and we wish you a good preparation for the next trading week. And as always, be aware of the risk, because risk management is the key to success in trading.